What's up, folks? Highest morning update, July 14th. Overnight low 37.50, overnight high 38.06. Both are important today. Yesterday, CPI low was 37.52, so we've dropped that by 2. And now we're kind of coming up a little bit. This just happened at 7:19 a.m. 0804 was the level we were watching. Obviously, the CPI did not care about that level, but since the overnight high is oh 06, that's going to sustain that. So that 08 to oh 04 level is going to be big. Your POC yesterday was 808, so from a bullish standpoint, we need ES over that. We need to get back over that 808 level to get back into some sort of sustained bullishness. Then you have the 25 to 28 level and then the 50 level. Again, to get any bullish structure, we would need a close above 38.50 to start to really kind of change this spectrum. But as of now, we're continuing to head down. 37.41, 44, that's the area I've been watching for it to hold. So we'll see if they defend that today. If not, then we'll start to head to 37.10 is your next one. 37.35 could hold that 33.35, but I would assume that if we break the 40s, if we hit that, we'll reverse. But if we don't, we'll go to 37.10, and then that would clear the gap from that SPX, and then 37.90 or 36.93, and then we have the 36.40 level from prior days of that low. There it is, 36.42 to 36.39. That's extreme. I don't think that we'll see that, but just know those levels are there. So the 52 and 50 right now, I mean, we're at 54, so we're just above it. So anything can happen today. I'm not overly bullish today, to be honest, the way that everything is set up. Here's your daily, so you can see the channel still intact. This 40 level here, as you can tell right here, we've come full circle, right? We bounced, we hit that 40 level, 41, 44, rallied up to 39.20s, and now we've come straight back down. So it's just been kind of a round trip, and then now it's decision time. Does this hold and we bounce back up, or do we lose this and then we start to test the lows? I don't know. Price action will tell. Hourly, 38.07 is your pivot, 38.62 is your R1, 37.41 is your support one, which coincides with the other low. So that's going to be pretty significant that our S1 lands on a low level that we're watching. So keep an eye on that. 37.41 is going to be a big number. Let's go to the quarterly. I brought this up as the 5 EMA on a quarterly chart. Is support in a bull market and resistance in a bear market. So 41.44 is still that level that this would need to get above to change any sort of macro direction on the quarterly chart. We're not even close. So again, just food for thought. Let's see the euro. Okay. Euro has dipped below parity by a short and curly, but has not followed through. So until we can get below 99 or into the 98, this parity is going to hold. And if it does hold, we have run the risk of a return up. As it being support, people are going to defend it, and then it's going to head back up. If that heads back up, I could see the short squeeze rally. I'm already sick of that term. That everyone's talking about happening that has not happened, right? Everyone's like short squeeze rally, and here they were like 98 or 980s next, and then they all got crushed. So just trade the day, but we do run the risk of upside. So keep that euro on your map because it's still important. It's still acting well in accordance to SPX. When this is heading lower, SPX heads lower. Now, it's not 1-to-1 and 100%, but, VIX is only 80% accurate. So I wouldn't say this is 80% accurate, but it's there. So something to watch. I would keep this on your radar. Other than that, I think we have economic news today. There was a Fed speaker at 11. We have producer inflation, or PPI, I believe, at 8:30. Everything right now is kind of a money or a market moving aspect. So any information is going to do that. But stay safe. Look for that gap, that other gap. So SPX, the 3707 or 6, I think, clears this gap. So that gap could be filled today if we really head down lower. But again, I don't know. Just stay safe because this thing's whipping around. You know, from a daily, again, up to 73 from the CPI. There's a ton of broken channels, you know, on this. You can see that all the singles straight up here, but it's all broken action. So at some point we would need to get back up to 73 to repair all that. On the north side, let's say we transition 3808, we get north of that 3820 or 28, 2528, and then 3850. If we can close above 3850, I think we could really see a shot at more upside. But again, I don't see that, and we're still running at 54 here. So anyway, that's kind of what I'm looking at. I'd really like to see a continuance of this. If not, then I think that it'll base and return back up, which should base and return back up the equities. If that's the case, then this 40 level will hold, and then we return back. So your round trip and then back up. Again, just theory. Comments on market structure, I think yesterday. When we talk about market structure, when I talk about market structure, I'm looking for tendencies in the, in this price action. So yesterday, you saw your head up. You had your initial CPI, and then you had a rally up, and then we kind of came back down and closed, lower, not on the lows, but lower. So, in past we would go, it would dip, and then we would kind of bubble, and then this would just continue, and we would make like new highs. But that follow through is not there. The Friday ramps aren't there. End of day sell-offs really haven't been there. So this is the kind of market structure. You look at tendencies. Does the 11:30, 12:30 hold as, times for highs and lows? Here your high was done at, in the hour of 1 p.m. So close enough, right? So this is your daily high. So these are the times, these are what I look at when they're working and things are working like we think they should, then that's good. But when they're not, then the market structure has changed and we need to alter stuff. It's just when you talk about market structure, you're looking at tendencies of the market. Every market has its own personality. SPX has it, and it has its tendencies to do stuff. When it stops acting like we think it should, then something has changed in the market structure, and we need to figure out what that is and how to play it. As of now, there hasn't been a lot of change in necessarily market structure. It's just kind of, we've been grinding down kind of in a bearish structure and heading lower. But again, we haven't seen the Friday ramps or the Friday sell-offs necessarily. So the 11:30, 12:30 still holds. So if we're traveling down during the day and we kind of bottom out between 11:30 and 12:30, and then we should head back up. These are the kind of things that we look at. It's not science. It's just kind of looking at pattern recognition, personality recognition of the SPX. We look at volume. There's so many variables in this, and there's no silver bullet. There's no like, hey, this works all the time. Nothing works all the time. This is trading. If everything worked all the time, then everybody would be a millionaire. But right now, your average trader who tries to make it for a living has about a 98% failure rate, because nobody puts in the time and everyone's looking for a silver bullet instead of just putting in the work and doing the homework and understanding how this acts and what personality and when it's going to change personality and when the market structure changes and when the outlook changes. So these are the things we look at, and these are the things we try to teach in this room. And that's why we, ask you to ask questions. So, anyway, that's my little PSA. Have a good day. Stay safe. Numbers coming out today. I think 11 a.m.'s a Fed speaker. Keep your profits close. If you see them, take them. I wouldn't hang out in this market. I don't trust anything. It's been whipping around at levels that don't really hold or shouldn't hold. And it's, although the structure's kind of the same, it's all over the place. So, and premiums are too. So there's a lot of scared money out there. So anyway, stay safe and yeah, try to not lose money.